go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but cheer up! Just stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Right, Jim? Jim knows. Gino says, hey, morning, really enjoying the streams. Right on. Hello, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Here every single morning to help you with technical analysis, fundamental analysis, trader psychology, all that kind of stuff. Anything that I can do to help you become a success. Well, why would Traders Way invest into your success up front? Is it purely altruism? Hey, wait. Traders Way is a boutique foreign exchange trading brokerage firm. And they're smart enough to realize that if their clients can be successful, certainly not lose money, right? But be successful, then they will be valuable clients that trade not just for a few months and then blow up a trade account, but trade consistently week after week, month after month, year after year. And that's actually a good business model, right? So like, great business model. We at Traders Way want you to succeed. That's why I'm here every single day. And I do hope that these webinars are helpful. Is that me? Hey. Wow, that's super creepy weird. Yeah, okay. Apparently I was watching YouTube videos yesterday. All right, cool. So hang out with us. Hang out with us today. And we'll do some technical analysis, some fundamental analysis. And then we have the FOMC today, Bank of England tomorrow, probably an ECB thing in there somewhere, right? But there's some big things going on. So thank you for being a part of my community. I wouldn't want to go through this alone. So let's start by taking requests for particular currency pairs you would like me to cover. Oops. Oh, here we go. Cool. All right. So if there is a particular currency pair, I would love to do that. Euro CAD, Tongo, every day, Euro CAD. Okay. All right. I need to start adding some of these things. I need to start adding some crosses to my setup. I mean, it makes sense, but it's just not something that was a big part of my trading career over the years. But let's do some crosses, okay? We had this whole area kind of lined up, you know, yesterday, the day before that when I covered this pair. And we had a lot, let me get this drawing thing going. We had a lot of things going on here. I went through and identified the support if you were a bull. But I also pointed that we were at resistance in here, okay? And that if it did go up, it would bounce off of this support area, okay? And that this would probably be a target area if it indeed was going to be bullish, but you couldn't be guaranteed that. Because, you know, a bear would still have it lined up like this, okay? And so you don't really know. Okay. Okay. RCATs, you know what, RCATs, I'm going to explore over the holiday break a third-party notification system for anyone that wants to volunteer for a better system than the YouTube one. And I found one it's just a browser extension, so it's not like I get your email address or something, right? You just kind of click it and it installs into your browser, so that when I start the feed, it just goes pa-chow off the browser, and should be much more accurate than YouTube maybe sending you an email notification that gets to you 20 minutes late. Just a thought. So I don't know if that's helpful, but I think it might be if you want. But anyways, so I hope you recall all of this. It's not a scenario that I would want to be bullish. I think that's what it was, right? I think you'll remember that I said that. Good morning, Del Beer. Yeah, Kyle. So I know a thing. I did a little bit of research and I put a thing in my to-do list. It's just money and install, and then see if you guys want to do it, that kind of thing. But anyways, I hope going back to this technical analysis, A, you get it, and B, why, like, even though that technically makes a ton of sense, that there should be an air of caution. This is the projected high for EuroCAD for the month of December. It's not supposed to go any higher than that based on technical analysis. Like, if you say, well, what do you mean it's not supposed to go higher? Well, that's just technical analysis. It's not my opinion. That's just that's what the chart says. And then in here, this is the projected high for the week. Okay, so it's a confluence of R2 and WR2. So when you're down here, like, the real move has already happened, and I think you recall me going over that part, right? I don't really care that this is EuroCAD. This is just technical analysis again, right? So this is the money maker, guys. This is the stuff that your career should be made out of. This other stuff, like, do you buy this? Yes, you certainly can. If you recall, I even changed the color of my gray highlighter so that it was not matching this gray. Okay, you see what I mean? So, like, we had that there, but my caution to you was the major move's already done, and we already double topped at very significant obvious resistance. There's no guarantee, or how about that? Because we all know there's no guarantee. It's significantly less likely that it has to go up this way. Or another way to say it is that we've lost a significant amount of bulls. And on the third week of December, there's no real need for these bulls to quickly jump back in and go one more time. That being said, if they were, it was going to be there, because it's a monthly pivot as support, this one here, but it's also a weekly swing. Okay? Not this price, not this price, not this price, not this price, not this, this price. So now what? Definitely don't buy it. Right? We know that. Maybe if you had to buy it, maybe something like that, if you really need to buy it. I'd understand your reasoning. I might not agree with it, but I would understand your reasoning. Yeah, RCats, why are you... What are you yelling about, Cats? This is not CAD strength. Yeah, it's CAD weakness, bro. Yeah, anyways, not sure what you're talking about. Okay. And can we get, well, it's all just profit taking, right? That's all it is. It's not people buying CAD if this drops. This would be people taking profit. We have to ask ourselves, are they going to get back in? And if they were, the logical area, like, remember, I have no idea if they're going to buy it back, nor do I have any idea when some guy somewhere in the world decides now is a good time. But using technical analysis, if I were me in that situation, I'm looking at that roll reversal, this pivot, that pivot, everything is somewhere there. Then you look for a psych level and you're like, yeah, how about $1.53 maybe? I dipped to $1.53. I'd say even at 152.80-ish, typically. So yeah, $1.52.80. You'd have to decide. But it's FOMC day. You know, it's near the end of the year. Do you really want to keep trading? You know, if I was a EuroCAD trader, especially as a bull, I'd be pretty much done. But with that being said, maybe CAD gained some strength on this. But did you see oil yesterday? Holy schnicker-schnacker. The amazing move continues. Finally through the strong support all the way through. And if you recall, and maybe we'll just go do that now. Yesterday I showed, like, begrudgingly, you could be if you wanted to sell it, you could certainly do it. And even if you're and I'm a bull, but I'm even looking at it like it could be sold. But with caution, all that kind of stuff. And do you remember? I don't have the analysis here. I thought we had it like this, something like that. I must have it on the. Let me go to the energy complex setup because I thought I drew it out. No. All right, let me go back to the other one. We had talked about that there's no hope for bulls now. Remember, like that? Like, I mean, it could pop up, but at that point, I'd just be good, right? So anyways, we had it something like return back to this roll reversal area, right? Remember that? Use the pivot, use the roll reversal, use everything that was supposed to be support and use it as resistance. Yeah, it was supposed to be a triple bottom, hopefully, right? But does anyone remember that? Like, do you agree that that's what we talked about yesterday? Like, I want to be a bull on this, but that is gone. So the only thing that is a retracement back to a roll reversal. Okay, I mean, you can see it's not quite perfect, but it does use the pivots to do it. But the point is, I want you to know that you treat it like a breakout. It's a breakout strategy. Okay, guys? That's what I'm trying to say. Not a level of, oh, Wayne was so smart. Well, if Wayne was so smart, I wanted to do this. But a breakout is a breakout, right? And you'll notice that when we're in range trading, right, I often do this, right? I have very, very colorful, thick tops and colorful, thick bottoms. And then what? I say, well, wait for the break, either below support or above resistance. Doesn't even really matter. But when it happens, catch the retracement like this. Okay. So it's just, once again, it's just technical analysis. I didn't pray. Maybe that's why it didn't work or something, right? I hoped for this to go up. I didn't pray for it to go up. So once it finally broke, it's just like, and this is a better roll reversal. Look at this. I mean, that one's perfect. Depending on how you lined it up, breakout, pullback, that's just technical analysis. Yeah, will you guys show up if I do an FOMC event? What I could do is I thought we could meet at 1, and I think I have a presentation somewhere to teach you about what the Fed is and how central banking works and monetary policy, the difference between the discount rate, the prime rate, required reserves, excess reserves, money supply, the effect on interest rates. Because I have a final exam today. Final exam. So I'm willing to do that for you or with you, but I'm trying to get to this graduation ceremony, not just be there, but I'm trying to graduate with honors on the dean's list. My son just the other day asked, Dad, will you play Call of Duty with me in the movie theater? I'm like, no. He's like, man, you haven't been playing with me in a long time. And I'm like, I'm doing homework, son. I'm studying for exams. Like, but I'll trade FOMC with you. Yeah. So if you're going to show up, I'll do it. Right, Kyle. What about our needs? It's a true story, though. I said, son, let me just get through this final, and then we can play video games. I mean, don't you have... See, the thing is, once they get like 2 weeks away from the end of school, they just stop getting homework. Okay. I guess, Carlos. I don't know. I'm just trying to survive. Trying to get through life alive, huh? All right, so, okay. Yeah. Okay. And I think what I'll do is I will only make it available to live people, and then I'm basically going to kill the video. Well, Stuart, here's the interesting thing, and I do want to move on, right? But here's the interesting thing. We are at a point where we're close to neutrality. Okay? Market wants to know when the Fed believes we're neutral. So this is an important aspect. 2, I think the market dramatically mispriced things and then dramatically just recently repriced things wrong. So just recently, like a month and a half ago, the market priced in 4 rate hikes in 2019. And then all of a sudden, boom, in a 2-week period, they changed it from 4 rate hikes to 1 rate hike. I still think they're wrong. Okay? So the market's going to learn about that, and that will need some repricing. Okay? So, and then lastly, there's so much talk about the end of the world, right? The end of, this is another Great Depression, right? We're on the precipice of a Great Depression. And when someone is talking like that, you need to stop listening because they have no idea what they're doing. And it's like, the sky is falling. And it must be very, very frightening to people like that just don't understand what's going on. They don't understand that they're lacking knowledge. So it must be very frightening. So they're yelling a lot. I suppose that's a proper emotion. But if you look at the data, no, I wouldn't worry about the end of the world. But let's go back to my previous concept. Well, it depends on what you're talking about, Jim. Some things yes, some things no. Like real estate, maybe. We're pretty late in the cycle. But anyways. I said 2 months ago, the market started listening and paying more attention to Powell. And Powell keeps talking about like, hey man, we're just trying to get to neutrality. And the whole market's like, oh my God, GDP is not that high. CPI is not that high. And the world starts freaking out. And through the pricing of the money market, right, money market funds, which is bank-to-bank trading of cash, we can see that they dramatically changed their pricing. But, well, what else happened about 2 months ago? Well, the stock market crashed. Well, so it's a chicken and an egg thing now. Did the stock market crash because of the mispricing, or is it people misprice it? Put it this way. Is it, if we're getting close to neutrality, well, let's even step farther back. Let's go back. Man, you know what? I should probably save this. You know, maybe I'll save this for the FOMC. I feel like I'm getting into an FOMC speech, and I'm like, that's not even till 2. So why don't we save that? I was just going to go crazy and ballistic there, but let's save those fundies for later. Yeah, put it this way. It's my opinion we're not on the precipice of a Great Depression. Things are mispriced. They're repricing to be more accurate. Okay? But boy, does falling oil, it's amazing to me. It's amazing, but it's, you know, wow. Amazing. Yeah, that's all I can say. I mean, technically it's just fine. You can trade it all day long, but still. Well, okay, now I got to comment on Ross's thing. I said it wasn't a market crash, but yeah, well, okay, let me comment on that. Let's pretend this is the stock market, not oil, but it's pretty much the same thing, right? That would have happened in here, Ross, and this is slightly something different, okay? A rebalancing of a portfolio, even that's pretty dramatic, but it's a normal process. Okay? It's a normal process, okay? This is more than that. This is some people realizing they're wrong. Also, you know, there's a lot of traders, or in this case, like money managers and stuff, that are in the game really late. They were not buying in 2008, right? They were buying in 2018. And so these, you know, they're just some idiots in the market that are late and way over leveraged. That's all. So this has to happen too. So what I was going to comment on, and I don't want to do the whole speech, I want to do technicals. But when the Fed lowers interest rates, they artificially increase asset prices. It's the whole point of quantitative easing. So we're in this point where there's a lot of things overvalued, like the stock market. So that needs to adjust. That's all. You see what I mean? Okay. All right. Let's just start up here, Aussie yen. Once again, we're on this line. Really wished it had stayed above this line. It didn't. In fact, it should have stayed above this line, and it didn't. So this yen strength, remember, we were talking about it around here. I said, you know, if it starts falling from this point here off the central, then it could possibly fall till the 3rd week of January. Does anyone remember that? In that situation there, even though it had gone up for almost a week, that if it fell here, it could fall really, you know, a long time. Any confirmation of that? Okay. Just trying to see what you caught and what you don't catch. Okay, good. Okay, because these are important things. If it went up here, it'd be important, but the down is more important because you can see we have the top here. So a bounce here is very logical. This is actually a monthly S1. You can see also I have this already marked. There's something this way to create this, right? And it's the projected bottom for this previous week. So, you know, if it's going to go up, it really needs to do this. Here's plan B. But if it dropped here because these guys were reselling, that's very, very big. And and I said it yesterday, we need to say it again. The December plan every year is somewhere between December 1 and December 31. Oops, December 31. I believe the yens gain strength and the yen pairs fall. And we talked about this in June, right? Like, no joke. Sometimes it's here, sometimes it's here. You know, last year, I believe, is around the 12th. And I think, don't you remember, we talked about that? On the 12th of December, I mentioned, well, I think a year ago, 12th was definitely in the move, and we already had this down move. So that was a concern. Well, now we're at the 18th. Yeah, real bummer. Real bummer, but it happens. Is it Trump? Is it the midterm elections? Is it the trade war with China? Is it new problems like the Italian budget, which may have been resolved today, but is it the Italian budget with the Eurozone? Is it Brexit? Oh, by the way, we're 100 days from Brexit today, aren't we? Oh, Rob says, doesn't the yen strength go to March, April? Well, here's what's going to happen. It's going to fall till the third week of January. Then it's going to rise for 2 weeks, and then it's going to fall for another 6 weeks. So I'm just accounting for this move, and then we can talk about that later. Okay. What happens, like, if you're not on the clue train, what happens is, like, let's say this is January, right? People wait late, and then they sell, 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 and then they're so convinced it's going to fall forever that they get caught up in this and lose, 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 and then, you know, give it all back, and then this takes off again. So you got to be, that's why I say the third week of January, because then I'm expecting a false rally. Oh, Jeremy says, what's the difference between market condition and correlation? Well, actually, they're two different things. I would define in simple terms, market conditions are prices are moving sideways, in which there isn't a market. If it's sideways, it's not a bullish market, it's not a bearish market, right? Market conditions may be more favorable to bullishness. Market conditions may be more favorable for bearishness, okay? That's the market conditions. Now, correlation is if the Aussie yen, which we are looking at here, let me clear this out so you can see it. Thank you for subbing, by the way. Thanks for the sub. Okay, I'll clear it back out. Okay, just here's a plain Jane chart. If we believe this Aussie yen's falling systemically, like it's not Aussie per se that's weak, excuse me, it's the Japanese yen that's strong, and if that's the case, yen would be strong versus everything, which means money is being returned to Japan for some reason. Okay? And if that's the case, we are in a risk-off mood. And the first level of correlation would be, to what level is CAD and Euro and Kiwi and dollar yen all falling to? Are they all falling? That would be correlation. But also, what happens in a risk-off mood? People buy safe haven. So maybe gold goes up. for example. Okay, maybe oil goes down. Okay, and the degree to which they are moving in conjunction with this other move is correlation. Okay. Kishan, I don't remember you, Kishan. A 2-month signal. Who are you talking about? Are you talking about me or are you talking about somebody else? A signal. I don't think I. Well, email me if you have a problem, Kishan. Anyways, I'm just teaching you technical analysis, bro. Yeah, my pleasure. All right, so let's move on. .com. Taking a look at this. Once again, I think you can sense my frustration. I really did want one more rally up until the end of the year, right? I wanted to start January basically a double top. Does that make sense? So here's an example of me being wrong, but how do you be wrong well? You have a plan, first of all, right? Like, these are pretty reasonable plans. Plan A, I think, was actually by here, although I believe I was cautious. Yeah, Arcats, I wasn't sure what he was saying. It doesn't sound like me, but I don't know. I don't know what he means. But he must be talking about somebody else, and I just didn't catch the first part of the chat, which I figured is it. But anyways, so this was a great buy area, and you can see it worked. But here's my area of caution, right? It's just this role reversal. Again, it's just technical analysis. And son of a, right? And son of a dang. But here's the interesting thing, right? See what I mean? Like, here's the thing. If we can walk away, like, how do you be wrong, right? This is clearly where the bears would live. And if you're a buyer here and you know that and prepare for it, it's not a shock. Now, it might be terribly disappointing, but it is what it is. Now, notice this is called a role reversal for bears. Okay? And as I've already described on other yen pairs, if this stays bearish, it could be bearish for a very long time, right? Okay. Son of a biscuit eater. Is that right, Michael? So, if you're frustrated or disappointed, I'm not frustrated with it. I'm disappointed with the way that it ended, because everything started properly. Back in August, it started really nice, and there were some good moves. Then it pulled back, and then it started again. But who do I blame for this? Why? Is it Brexit? Very much could be. Is it stagnation in Europe? Very well be. All of that leads to a China showdown, so that's great. Trade wars, they're not good for business. They're not good for trade. So I guess it just, it's layers of an onion, right? Yeah, we'll do Euro Yen. Yeah, David, on the right-hand side, I think that of tradersway.com, there's a link to like bonuses or something. You can consider that. So Jeremy says, blame China. Yeah, well, 10 years ago, we blamed the Russians. It was always, it was the Russians' fault. So, yeah, whatever. I guess, it just all adds up. It just sort of all adds up. Like, the yens haven't crashed yet, but it sure fizzled, and it fizzled a bit earlier than I would have liked. You can see basically the second or third day of December started coming down. Last year, it happened about the 12th. So, we were up here when it came down, and I was really hoping for more elevation. I didn't want this to be the top of 2018. I knew it was coming, but it's disappointing. Okay. Euro buck. Well, we got to do this because we have, the Fed today. And I guess we could do a little more day trading on this, right? Well, let's start on the weekly trade plan. Excuse me. The weekly trade plan is this is a buy zone, and this is the target. Okay? Once again, it's just factual. This line right here. Okay? And this is a monthly M2, so you could even double. Was this the one that I had like 3, 4, 5 lines of support on at one point? It is, isn't it? Let me clear this. Oh, it is. Remember this on the 1-minute chart? I outlined this on a 1-minute chart. 3 reasons why this would be support. Look how small it is now because so much time's gone by. Okay, like there you go. We did this minute by minute as it was falling, and then I drew those 3 lines. And I said this was not a Barack Obama line in this end. So anyways, cool. That's really funny. Okay, so anyways, that's obviously a bottom. And if you believe that, then we're supposed to be heading up here. That's the sort of the basis of my thought process right now, okay? We're supposed to be heading up there. And we knew that Friday of last week. Okay? You're welcome. And then on Monday, yeah, and then this one here. Okay, great. Okay. But you already know that, like, now what do you do, right? Like, how do you get to the next level? And so this is day trading now. And what I like to do is you go, dee 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 dee, boop, boop. Okay. Monday, Tuesday, Wednesday. Monday's day trade plan, swing, there's your top. Okay. Took a little while, but we hit it. Okay. Today's day trade, swing, there's the target. And technically, we hit 114.13. Is that funny? Like, my charts say 114.13 is the conservative bullish target for today, and we hit it to the exact pip. That's crazy, right? Once again, when I see stuff like that, I back myself out and I try to build courageousness, confidence, and discipline. Like, do you remember our conversation on Monday about someone asked me about, the worst mistake I ever made? And I'm like, well, it wasn't one. I made every one of them, and I made them all in the same hour. But I went back to, like, describing how I crawled out of a bad period. And it came from building discipline and rebuilding my confidence, right? Because you cannot be a successful trader, no matter how talented you are. If you're not disciplined and you're not confident, it ain't going to happen, son. So how did I rebuild that, right? Well, I do this all the time. Like, when I see things like that, like that's precisely the daily M4, then I say to myself, it works. This is it. People use this. I know what's going on, right? I know where people's orders are. Their buy orders, their limit orders. It's one of these, I'm good enough, I'm smart enough, and gosh darn it, right? It's one of those kind of things, like you need to say it out loud, like, I got this. Like the fact that this is exactly our bottom that I did on a 1-minute chart, I need, not out of arrogance, out of the need to stay confident and disciplined. You need to reward yourself psychologically. So I remember way back when, 2003 or something, and I'm trading. And I realized there was a psychological flaw in what I was doing. Every time I lost money, I felt like an absolute total idiot, right? I'm like, oh, how can I lose again? 3 in a row, like, dang. And I'm not that type of person, right? So like you really start to feel emotionally destroyed. But then I noticed something too. If I made 15 pips, why not 20? If I made 29, why not 50? If I made 50, why not 100? And I remember days like, 100 pips! Woohoo! But then I'm like, then I watch it go another 2 days. I'm like, oh, crap. If I'd only stayed in, I would be up like 200 pips. And then I would feel bad about making 100 pips. And it occurred to me, I never felt good. I never felt happy. I never felt confident. I never felt right. And I realized there's no way you can survive a gig like this and beat yourself down when things are good and beat yourself down when things are bad. So that's what like Ryan's performance coaching is amazing, because it's exactly like what I took myself through way back then. Because it just occurred to me, like, one of the things I did in that scenario, looking at my trading history and then realizing that I need a long-term goal, like a business plan, and I did all my performance cash flow statements and stuff. I realized that like today didn't matter. In the scope of 1 year or a 3-year business plan, if I'm not over leveraged and I'm not taking ginormous risks and big, stuff like that, then if I lost money today, shoot, if I made 5 bad losing trades in a row, on the scope of 3 years of trading with discipline, no one would even notice in my trade history. Like, it just didn't really matter. And because I wasn't never, ever loading the boat and taking these giant risks, well, I never put myself in a situation to make a lot of money quickly, which also meant like there wasn't going to be days where you look at your 3-year track record and you're like, oh my God, what happened December 18th? Holy smokes. You're like, well, I took my whole trading account and I pushed it in. I swear to you, I know someone who put in something like $50,000 in cash, maybe more than that. I bet you it was $250,000. And this guy wasn't rich. He did it with client money. So he basically took his whole account. I am not joking. He took his whole account of other people's money and traded rollover. Okay? Someone the other day, like 2 or 3 weeks ago, was complaining about rollover spreads. And I was trying to say, well, look, it's not like the broker. It's not like Trader's Way manipulating things at rollover. That is the interbanking system. So if you want a broker that ties you with the interbanking system, well, you're going to get interbanking system prices, and that rollover, the spread widens. It's normal. So anyways, this guy who I know very, very, very well, by the way, I ended up having to lend him like tens of thousands of dollars. But anyways, he put all his client money in and made something like $20,000 on the rollover. Because on rollover, you get paid interest. And there's a jump in spread. Sometimes it's for you, sometimes it's against you. But anyways, he took his $250,000 in cash, of course, levered 100 to 1, and just went in, just simply to catch the rollover. And he made like 20,000 bucks in 1 minute. But, you know, he could have lost 100,000 in 1 minute too, or worse. So anyways, you never want to put yourself in that situation. And you never want to see a big winning day like that, because that reward is a function of risk. And if you're making big moves like that, you're taking big risks, and we know eventually you're going to have that drawdown, and it's like bad, like just seriously bad, everything bad. So today shouldn't matter. Tomorrow shouldn't matter. On the long run, what matters is you stay, right? And when I realized that, it took the weight off my shoulders. And if I went through a bad period, I could say, well, I need to focus on the work. Why did I screw that up? I need to go back through my charts. I need to figure out what I'm missing. Is it technical? Did I miss something technical, or is it a fundamental thing? You know, what did I miss? And I would go through it and try to like figure out how could I be wrong? Like, why did I have a bad day? It was like one of those things, like, but I didn't feel bad. And then if I had a good winning streak, or I had a day when I made unusual amounts of money, it wasn't me. The market paid that day. That's all. Like, I happened to be in the right trades, and the market took off just like my technical analysis said, but that's what it was supposed to do. So like, but I'm not over leveraged. I didn't like go all in, bet the farm on this thing, right? So then all of a sudden, now you're in a situation though, like you're never really upset, but you're never really like jumping for joy. You know, like in my book, I say, you know, ring a bell, bing, 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 woohoo, I just made a winning trade. Well, no, actually, no, it's just more like, oh, that was good. Well, guess I got to get a latte, right? And off you go. Okay? Diddy, the template is in the description below the YouTube video, the download link. It's charts.fxbootcamp.com. By the way, I sent the OCO to people, but I'm wondering if I updated it on the, you know, I don't think I updated it in the system. I only emailed it to people, the new OCO. So I better do that. But hopefully you guys got the new OCO. Yeah, good. Yeah, it's wicked awesome, right? So compliments of the firm. Thank you, HB. HB Accounting. Are you Harvard Business School accounting? I just took a final examination, a Harvard Business School. Harvard Business School is a financial accounting. It's pretty good class. I liked it. Hey, Bashir, classified GT. What's going on? Tindany. Well, welcome, guys. Oh, what is an OCO? One cancels the other. So I emailed everyone that has downloaded my chart templates for free, right? Just thank you. In fact, I don't even send you to like a download page. I'm not doing like click spam to get page views or something silly like that. I just emailed it to everyone. Here you go. No sales pitch, no upsell. Just here, enjoy. Okay. Well, then the email you put in wasn't. I mean, I just sent it to everyone. So, anyways, an OCO. What happens is when I enter a trade, it immediately goes stop limit. So let's say let's say I'm a bear and I want to sell here. I go click. Well, first of all, you got to have it set up, right? All right. So let's say I want to sell right at 114. So I go click 114. And then a few seconds later, or the next time you get a tick, so it could be 1 second later, it could be a half a second later. As soon as you get a tick, what will happen is that order is executed. All of a sudden, a stop is put above you and a limit is put below you because it's a short, and you're done. And I haven't touched anything. I haven't thought about it, all that kind of stuff. And then I'm free to move it. So let's say, for example, let's just say based on my settings, it put a stop here, and it put a limit here. Well, I can then just drag this up and move my stop to here, and then I can move this down to here if I wanted to. And, you know, my entry is here, right? So now I'm risking this much, going for this much. What is that, 1.5 to 1, right? But more importantly, it does it automatically, so no matter what, I'll always have my risk defined. Well, don't download the whole thing. I emailed it. It's in your email. And it just says, here's a button, you click it, and it just pulls it straight down. So if you didn't get that email, don't go through the whole process again. I need to update the you know, the original one where you go through and you get the folder with all the files and everything in it. I need to take the new version 2.0 and replace it with 1.0. So don't go through because you're still just going to get the old version. So let me update the system. I just emailed directly to everyone that has already gone through the process. That's all right. Okay? So don't go through the process again. Okay? Work great here. Right on, Jeff. Well, Torgo, I appreciate that, but why don't you just let me do it and have them do it? Otherwise, they're, you know, just let the process happen, Torgo. All right. Okay. We got to go over here. Gold. Okay. So what was our trade plan the other day? The trade plan the other day was buy a dip. I wanted somewhere in here. Well, it went a little lower. I don't remember what this was. We must have did that on a smaller time frame. Oh, I remember now. It was a 618 to a 1382, wasn't it? I think that was the plan, wasn't it? So let's check this out. And faux show. There's the 1382. Not working for us. But notice that we're at, I'm trying to find the right view to show this. We're at a top, and it's holding. So I would get rid of this fib now. That play is done, right? The only way this is going to go up now to that level, I mean, if this did hold, and this might turn bullish above that, if it goes below this, it's dead. It'll do this now, okay? If you're a bear, that's the setup. If you're a bull, this is it, man, and it heads up here, okay? Okay, and then here, so yeah, we need to mention this too. This was the first setup on Friday or Monday. Okay, so if you're like, well, Wayne, this pissy little trade only half worked. All right, you're right. That pissy little trade only half worked. The trade on Monday was buy it here, or Friday was buy it here at 1,234 and a half, and now we're at 1,250. You know, it's $15, bro. The player pro says, can I trade in Forex? Probably not. You got the CAD news? Yeah, so let's switch over. Remember, though, I think everything is superseded with oil. It's just such a big thing. So, like, think of all these central banks like Europe, for example, that are desperate for inflation. What happens to the Eurozone? Well, I don't know you, player, and most people don't succeed, so I don't know, player. What do you want me to say, player? I don't want this. CAD, Euro CAD, Euro CAD. What were we doing, bros? Let's do it this way. So we're at the daily central pivot. We're basically at the daily open. Okay, this is the projected bottom, so there's not much to do there. Some wicked volatility, right? Again, I'm just dancing around with this. Always mark your lines. Make sure you know where you are. RCATs, that's pretty funny. That's a good way of dealing with it. So anyways, our player pro, no offense, buddy. I don't know you, so I don't know how to answer that. So, you know, I was up at 2:30 in the morning. It's 8:30 in the morning, so I guess I'm a little bitchy today. So I apologize. Okay. Will there be a new higher high? Okay, so if you're doing a basic scalping technique, then you're looking at this as an entry if you're a bull. Now, I'm not telling you should be a bull, but if you're trading the initial volatility, which is up, then you need a pullback into support. And then you're going to look to go long, okay, like that. That's just a scalp. So is it going to make a new high? I don't know. Do I want this to go up? I don't want it. There's no yes, there's no no. It's just technical analysis, right? So and it's just a scalp. So that if you're going to scalp, that's as they say in Italy, this is your Bisoni. And your general trade plan for a Bisoni is catch a dip, off we go. And you do this on a 1 minute chart. It's a scalp, not a group hug, okay? So that's that. Do you have to trade that? No. The next thing is then you can do the counter moves, okay? So you got the sell off here, you got the buy off here, and then you got the breakout moves, which is out, down, and up if it does that, or breakout, pullback, and there. So there's like the first scalp, okay, the second top, the third top, the breakout top, the breakout bottom. Lots of different things, right? So the first one is just your basic scalp that I've taught for 15 years. Well, that's not true. How long have I been doing NFP? 13 years? So it's 13 years, right? Is that right, Carlitos? Thank you. Yeah, and again, to Player Pro, I'm sorry, man. I'm sorry. I shouldn't have said that. So stick with us. Player Pro, some people have been in my webinars every single day for more than 10 years. So I'm just saying, it's a job, man. It's a job. So it's a miss, but even then, that's pretty low. So, you know, so one of the things I'm thinking about in regards to the Fed, not the Bank of Canada, but the Fed, like, should I use CPI or PCE to create a neutral rate? But what if I use GDP as a neutral weight in the model. So so the Fed wants to get to neutral. Does that mean like an interest rate neutral? But what if it was? And of course, any college professor would disagree with me on this. But like, what if we use GDP? What if GDP at like what Canada just did, less than 2%? Oy vey, you'd have to put the brakes on interest rates, right? You'd have, right? Oh, I'm sorry. I dropped into a scalping setup, so there. But this is USD CAD. Okay. Typically, I have a watermark, but we're on a 1-minute chart, so I'm on a different setup. So I apologize for that. But we're trading CAD news, right? Is that right, Lop? Brooke, still long? Brooke, did you go on vacation or something lately? Brooke, there it is. Brooke, there it is. So we'll see. Now, this is called the line in the sand. So this is going to be the challenge. How low must I slide? And it looks like a 382, so if it breaks, we're doing a 1618, just basic stuff. Yeah, well, I already popped them up there, and quite a bit less than the month before, and that's the discerning part. Hey, look, it's really funny to see me behind myself. Look at, there's a bit of a lag. Let's see how long. Yeah, it's kind of wild. Look, I'm still talking. I guess you couldn't see that. Yeah, you can't see that. Where is it? This one? Yeah. Oh, yeah. You can't see. There it is. Anyways, I can see our live webinar going on. It's kind of funny. So this is the line in the sand here. And again, that's in 10,000 other videos I've done. It's in my trading book from 12 years ago. I mean, it's nothing new. If it fails here, it's going to probably completely reverse. All right. Okay. If it doesn't, it's going to do this. If we can't break above this line, then it's going to totally collapse on us, right? So it's of interest now. And with that being said, you have the choice to move your stop. So let's say you entered this trade, about here, right? You're sweating bullets, of course, but your stop would have been down here. You could just say, well, I'd rather just, if it ain't going to work, it ain't going to work. And the reason for that is this line is very important. So you're like, well, you know what? I'm supposed to have the volatility. It's supposed to take off. It's supposed to make a higher high. And, I've waited 8 minutes and, you haven't broken the line in the sand. You can grow cautious and then say, I don't care if it knocks me out of break even and then takes off with me. if I remove the risk of it having collapse and I just sit here and throw away 20 pips, right? So you're right. No one's going to laugh at you 3 years from now because you took a 6 pip loss on a scalp, but you protected yourself from a 30 pip loss, right? So it's always a thought. Remember, like, scalping shouldn't be the basis of the success of your business. It's something you do to enter your trades. It's something to do to pass the time. It's something to do to make some money. But it shouldn't be the basis of what you do, right? It should be like, it's just a scalp attitude. And nothing wrong with a 6 pip loss. Now, a 6 pip win is dumb. Does anyone know why a 6 pip loss is okay, but a 6 pip winner is stupid? In my humble opinion, remember, I can say anything I want as long as I say my humble opinion. Why is one good and the other bad? Why is the loss good, but the win bad? We'll see where this goes. Didn't let your trade mature. That is definitely part of it. You're programming your mind. Sometimes you scalp. Loss managing your risk. Waste of time. All right. It's mathematics. IBAX. Welcome to the family, IBAX. Hey, remember everyone, we're going to meet at 1 o'clock and prepare for the FOMC meeting. And at 1 o'clock, I'm going to teach you central banking policy. I'm not going to record it. I'm going to broadcast live for probably 2 hours, even though I have a final examination at Harvard today. I will do this for you. So hopefully you guys show up. Make sure you subscribe, otherwise you won't know when I press the button. You won't know the link. But I'll run it for 2 hours, and then it's going to disappear, and you'll never see it again. It'll be on the Forex.Today YouTube channel. In the meantime, I would appreciate if you visit tradersway.com and open up an account, even if it's a demo. Let's start there, okay? Thank you, Andrew. Okay. All right. Let's go back. The reason a 6 pip loss is acceptable, but a 6 pip win is not acceptable, comes down to pure mathematics. Aha! Mathematics. All right. If your average loser is the sum total divided by the number of trades, and let's say half your trades are 50 pips, half your losing trades are 50 pips, and the other half are 5 pips or less, or let's say 10 pips or less. So on average 5. What does it do to your average trade? Half your trades are minus 50, but the other ones you're basically breaking even, but you're not. I never try to break even. When I'm moving my stop to break even, I'm moving it to minus 5. I don't want to record a break-even trade as a winner. Lots and lots of people they're so scared of losses that they jam their stop at break-even, or +1 or +2 or +3, because they want to show someone they've had 27 winning trades in a row, but they haven't made any profit. Like, why is that good? Look at me. I haven't had a losing trade, right? I've had no losing trades out of the last 100 trades, but I haven't made any money either. Right? Well, then, like, nobody cares about that. You have 100% winners? What does that tell someone? That you don't know how to take a loss. And losing is important. No, in my book, I said you should take pride in your losses. Okay? So anyways, so all your break-even trades are -5. And all your real losing trades, like the ones you thought were going to be winners and then ended up not winning, they're -50. What'll happen to your average losing trade is they will get significantly smaller. Your average trade won't be -50. Your average losing trade will be -22. Something like that. Because the small losers are watering down the few losers. So let's say like 2 trades out of 10 are losers. You definitely lost money. -50 each, right? So a total of 100 pips lost. But then you had 5 losing trades of -5 each, right? So now it's 8 divided by 125. And you'll see that it's much smaller, much smaller, okay? Because you're averaging down, okay? But then you're left with what is it, 3 winners, 4 winners? But those winners are not like 4 pip winners or 8 pip winners. These are 50 to 100 pip winners. Let's say they're like small little day trade swings, right? So now your average winner is, let's say, 50 pips, and your average loser is 25 pips. Now the funny thing is, right? So I don't actually thinking about it, those numbers don't work out because you're still losing money. But anyways, you shouldn't be that bad. Because that means you got what was it, 7 losing trades at 22 each, and you're but anyways, you should fuddle with the numbers, right? So your average winner should just be your legitimate winning trades. Like, no, you shouldn't be planning for an 8 pip win, right? So if your trade plan has collapsed, take a 3 pip loss. Don't take a 3 pip win. Because if you take the 3 pip win, you water down all your wins. So imagine now you're showing a client in the future your trading history, and it says, well, your average winner is only 22 pips or 8 pips. People look at it like, you don't know how to make money. Okay? So you want your winning trades to be big. You want your losing trades to be small. And you see how just like the mathematics, it's not a trick. You're not lying to somebody, but it's just logical that you should pay attention to such things. If your trade did not work the way you planned, how do you want to record that? As a winning trade? Because you want a high win ratio? A high win ratio, by the way, when you're dealing with professional investors, a high winning ratio is a dead giveaway to never, ever, ever invest into you. Ever. You're like a dead man walking. If you walk into a room with an investor, hand him your trade history, and it says you hardly ever take a loss, oh my God, they'll just start laughing. And then they'll leave. They're like, dude, good luck. Okay? So you want to show people when things go wrong, you record the loss, but it's a minor loss. Cost of doing business. You took a reasonable risk. This one didn't work out. It's very, very important that you show people you know how to risk and know how to manage the portfolio when things go wrong. Okay? Okay? What time is it? So I hope that makes sense, guys. Yeah, look at this scalp, huh? So, risk management we talked about today. We're in another scalp, just a high volatility event-driven strategy, nothing complicated. We got FOMC coming up. I think we talked about trader psychology and discipline. Okay. And I think this last piece, I mean, is actually quite important. If you want to be a professional one day, it's best that you know this stuff now and not in 3 years. Like when you're raising significant money, like let's say someone's going to give you $100 million, one person. They're going to send a due diligence team. And I remember reading about one story about a guy who was a professional trader, had 15 years of track record, and it was good. So the investor sits down with the trader. But the investor's savvy, obviously. If he's investing $100 million at a time, this ain't no chump, right? So the investor has the track record of not only this potential trader, but all the traders that have worked for him, and then all the ones he's analyzed over the years. Anyway, so the investor goes back and says, well, October 17th, 2008 was a horrific day. We know that because, the markets were crashing, banks were going out of business, Lehman's folding, everybody, it's like a real bad day. And he knows it because it's the real world. And he's seen his portfolio and these other traders that he invests in and the other asset classes that they're in, they see it like that was a bad day. So the question is, how did this potential trader handle that day? Was it significantly worse? Was it less worse? Was it less bad than average and all this kind of stuff, right? So he sits down with the trader, says, give me a track record. Trader doesn't know anything, right? But the stats are great, good stats. Trader hands it over, and they go right to October 17th, 2008. It's just part of the test. And looks at it. No trades. They handed it right back. F you, you're lying. Goodbye. And walked out the door, and that was the end of the conversation. Bullshit. What happened that day? Blah, oh, well, blah, 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 blah. No, look, if you're not, no. You wouldn't, right? And that was the end of the meeting. Because people want to see your losses, guys. They want to know, how did you handle the situation when the market was not going as expected? What did you do to protect the money? And maybe what did you do to make money? I mean, what did you do? So you want to show you know how to take losses. If, for example, another way of looking at it is risk-adjusted performance and the difference between alpha and beta. A savvy investor, before investing money into your Forex fund, is going to look at things like, well, what happened to your trading in June, July, August, September, October over the last 3 years. And they know what the market does in these months. Let's say the average return on those months is less than 1%. Why? It's summer. Nobody's trading. There's no volatility. VIX drops to 7. I think you guys remember during the summer, people were whining and crying that the VIX was at 7 and nobody's trading. You can't make money anymore. And I said, look, what do you think's going to happen when people come back in August? They're going to trade again. Volatility is going to, why don't you just buy the VIX now? And of course, I think it was the next day, VIX was up 20%. But anyways, if they know those months have low returns, that's the beta. What does the market tend to do? What did the market do? Okay? And in this case, not like what did the S&P 500 do? Well, what did other currency traders do? And when volatility is low and volume of trading is low because of the summer, they know that. They expect that. So they want to look at your trading results and see that during those months, your results are what they would expect. Not that good. But what if they take a look now, right? What if they take a look at your trading history and found that your account was up 10% in late July? And they're like, well, dude, the market wasn't moving. Nobody was trading. The average, the professional trader was up like 0.25%. You're up 10%. How did you make so much money when the market wasn't moving, guys? Yeah, my pleasure. Compliments of Trader's Way, let's just say. How did you make money when the market wasn't moving? Risk. And what does a professional investor do? Zip, zip, zip. Thank you very much for your time. It's a pass, no go. Good luck to you. See you later. I'm gone. And they walk right out the door. You made money, but your risk-adjusted performance sucks. You make money by taking risk. You don't make money by doing your job. Okay? And it's gone. They're like, that's it. Goodbye. End of conversation. They can do it in the middle of your speech. And over here, and in June, we made over 9%. They're like, really? Goodbye. Right? They're gone with their 100 million in their pocket. Anyways, so I'll see you guys for the FOMC. You guys want to talk central banking policy? I'll teach you some money supply stuff. I'll take you. I'll take you into the room of the Federal Open Market Committee meeting. You will actually see the room, what the room looks like where they do this, and I'll explain the difference between the green book and the beige book, and what they talked about yesterday, what they talked about today, and in the order of which things happen. Yeah, I'll take you right into the room like you are a member of the Federal Open Market Committee. Yeah, at the Forex.Today YouTube channel, so make sure you subscribe, make sure you like. Please leave a comment, please, not in the chat, in the video, under the video, like in 1 minute, it'll be available. You know, how about this? I might start doing things like I will only cover currency pairs that you request formally under the video from the day before. So like if you want me to cover EuroCAD tomorrow, ask it in today's video. Put it in the comments section. And then what I'll do is I'll go in and I'll look at the comments and I'll see what you requested and then I'll cover it tomorrow. Okay? So let's do it that way. Let's try this. Let's see if I can, right? If you want me to cover a particular currency pair tomorrow, leave it in the comments of the recording, which will be available in 1 minute for you to do so. Okay? We good? Peace on earth. May the pips be with you. May our profits be above average. And I will see you, well, sometime this afternoon. Only subscribers will know. If you subscribe when I click stream, you will be notified. Maybe YouTube doesn't. All right.